The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 12th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I can make that one little 2x4 shift, it means we can find the gift in every set of circumstance that a life is going to toss at us. Today, you and I, we're going to go check into the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Of course, you can send me an email, steve@tfn.com, like Warren did. We'll check into his question. And, of course, instant message inside the Tiger's Den. So any form of communication works for me. So let's go ahead and get this show started on Magnificent and Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading up 15 points. He's trading out at 19,771. S&P is back 5 points at 2254. NASDAQ Composite off 43 points. Russell 2000 down 16 points. That's the leader to the downside. The DAX closed down 13. The FTSE closed off 63. Gold is up $5.50. Silver's up 25 cents. Light sweet crude up $1.70. Lead the charge here to the upside. Regeneron Pharmaceuticals, dollar-wise, up $20, a little over 5%. Equinix up $10, a little over 3%. Chipotle up nearly $8 or 2% to the downside. Optho Tech down $32, 85%. Yikes. That must be a phase 3 that didn't go very well. Priceline is off $24, 1.5%. The Lexington Pharmaceuticals down 21. Amazon off about $9 right now, trading down a little over 1%. Okay, so drum roll, please. Now, where do we start? Let's start by taking a look at on Friday. What you and I were looking at, we were noticing inside the NQ specifically, we were noticing a seventh wave move that was out here. That since vanished out here, but price was moving higher, doing less relative energy, right? So a secondary short-term or long-term topping pattern out here. This is a 30-minute chart, so we're going to call it at least a short-term topping pattern. Get a nice little bearish engulfing candle at about, 10 o'clock last night? Some additional follow through to the downside. And what we may have going on right now, is we may have a to B equals CD to the downside. You are in wave number 6 out of potentially 7 if it's going to find some type of bottom. That has yet to be formed. So the A to B equals CD pattern that is in play right now inside the NQ takes you to a price level of 48.27. 48.12 is more likely the call on that. It's found support, meaning the NQ here over the past hour, but there's not anything on a 30-minute chart that says why it has found support in this 48.50 level. We could take a look at market profiles on different time frames, see if they're out there. But here's one of the patterns that is in play. Now, is that pattern likely to play out? Well, the other time frame that you and I looked at, and we said, hey, a seventh wave is forming out here, was on the 5-hour energy drink chart. As we take a look at this 300-minute chart out here, it, in fact, did form, gave you a key reversal session, gave you a seventh wave move. And as we speak right now, price is trading below the very importante 48.69 level out there. That's that oscillator unchanged area. Now, what price has also done, though, as you can see, it's pulled back into what used to be old resistance, or really could have been, because of the makeup of the 5-hour chart TAS market profile box out here. So price has come down to what should have been an old level of resistance. It now is a new level of support. So on the excuse having cough for, of course, I haven't been spoken like this for a while. But if we were on the on the 30-minute chart, we were wondering, say, well, what did the NQ find down in this 4850-ish level as support? Well, voila, now we know. It's this 5-hour chart. So what's really going to be key, in order for the NQ on a 30-minute basis to go finish that A to B equals CD pattern, we're not sure whether it's the 1-to-1, 1 to 1.272, or beyond that, would probably be moving, closing, price getting below and staying below 48.54. 48.54.50 is what we'll call it. If that occurs, then that says 48.27 would be in the cards. Now, 48.27, does that line up with anything out here? Well, I'll be a son of a gun out here. 48.27 happens to be the A to B equals CD pattern on the way down. And it's really with regard to the markets moving lower. We can go take a look at the other equity futures contracts, but we're not going to find anything else that has given us that good of a signal out here. It is the battle between the NQ. Well, we should look at the Russell. Yeah, why don't we look at the Russell? Let's look at its 5-hour chart out here, because it's up 16 points or so. Now, it has been moving higher, doing less relative energy, therefore the diagonal out here, trading below its oscillator and change line. We haven't seen that since the move off of the December 4th area out here. So where is it headed back to? It looks like 1367 on its 5-hour chart. It gets below that. I'd be targeting about 1345 level on the equity futures contract out there. The Dow still, still green, mean and green out here. And what we can see, 5-hour or 30-minute chart out here, really nothing of significance that I can identify out here that says, hey, be careful, beware. If we go to a 5-hour chart out here, all the price has done is come back and tested a level of support. That's that Stevie red line out here. So this doesn't exactly look like it's in bad shape. So the fight is on between the NASDAQ, or the NQ in this case, as we look at the equity futures contract, and probably all other charts out there. Okay, so that's what the market is. We're going to take a look at more of the indices and things of that sort. I want to answer all your questions. So that being said, let's go try to answer the question that Warren sent in, although Warren sent in a very lengthy question. Some of it was technical, some of it was more fundamental. So we won't really go into the fundamental aspects of it, because there's nothing that I can prove there. So let's take a look. And the first premise was, hey, as he was looking at the XLU, utilities sector, top portion of my screen, versus the TLT, certainly he has noticed that they tend to move in similar directions out here. And, of course, what he was suggesting was, hey, what does this mean? I don't know that he phrased it exactly like that, but I'm going to assume that the question was first, what does this mean? You've got the XLU, which has clearly formed a bottom out here, moving to higher highs, and the TLT moving to lower lows. Well, we're going to go to this break here. I'll try to find some other divergences. I don't think I'll find many. Here's what I can say. The holdings inside the utility sector are totally different than the holdings inside of the TLT. Of course, you know that. We'll go see if there's any meaning here, and then we'll go take a look at each one individually to determine the trade. We'll be right back, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. As we take a look at the XLU and the TLT, again, the top portion of my screen out here happens to be the XLU, the utility sector inside the S&P 500. If we come back in the time period of 2010, what we can see here is, well, first, let me give you the summary. I don't see a correlation that says if the XLU is making higher lows, and that tells us that the TLT is also going to go ahead and turn. I don't see that correlation out here. Now, I haven't gone through each one, but in general, if we take a look at the screen out here back in 2010, basically there was like a double bottom pattern in between about June and June 30th, so the early part of June, and yet the TLT was just moving higher. In other words, is it the utility sector that's telling us the direction of the TLT? Well, here you've got the utility sector making a lower low between March of 2011 and August of 2011, and the TLT, bond just continued to motor on, the Motor City, to the upside out there. So no correlation out here. Here, we did have the utilities moving higher, making a little bit higher lows between June of 2013 and January 2014. And here we, in essence, had a double bottom between that same time period with regard to the TLT. Granted, yes, the TLT moved higher there, but here you've got utilities making a lower low between the time period of approximately June of 2015 through September 2015. Yet we have higher lows inside of the TLT. And now you can see we're right here. So the first, my response to Warren would be, I don't see a divergent pattern here there's a heads up as to what the TLT is going to do. I'm kind of assuming that you were wondering more so with regard to bonds, is this a message? Instead, I say you trade each one interdependently. That is, unless you know what you do know, that it really is the yen futures that have the correlating factor to the TLT, or the 30-year Treasury, as well as to gold. So that's one where it is working, and we're going to pay attention to that. But specifically with regard to TLT, Let's take a look at a chart out here for it, because that's what you were looking at. Then we'll go look at the XLU. There are some similarities with regard to the way instruments make tops and bottoms. That's for sure. And that's the one thing that we should always take with it. Now, those types of patterns are price moving lower, doing less relative energy. Well, as we take a look at the TLT right now, we can see that that is what it has been doing since November the 15th. It has been moving lower with less relative energy out here. It's only been above that oscillator and change line a handful of times out here. But again, the TLT is going to price different than, in essence, the underlying instrumentation, so to speak. Because if we go take a look at the 30-year Treasury, we're not going to see the same pattern. So let's not get – we've got to be careful. We should be careful when we're trading these ETFs to really know what's underneath the covers. And in the case of the TLT, it's kind of mind-boggling because it makes nearly impossible to really track this, because if you go take a look at when all the holdings within inside here are expiring, it's all over the place. So there's not really one thing that we could, so some have a duration that's going to expire maybe this week, next week, or this year, or next year, or earlier in some 20 years from now. So, but what we do know with regard to the TLT has been pushing lower. It's in wave number 6, potentially wave number 6. To the downside, right now we're waiting for some type of bullish reversal signal. It's not there. Differently, when I say differently, what the heck's differently mean? If we go take a look at the XLU, where is it? Here's the XLU. We can notice that it too had been pushing lower with less relative energy, formed a nice little bullish reversal signal here, that little gap up. Remember, gaps are your friends out there. Don't get too caught up in whether it gets filled or not. Little breakout session on November the 15th. Remember, November the 15th, I believe that's when the TLT was just beginning this pattern of moving to lower lows, or the potential of lower lows with less relative energy out here. What it looks like to me inside the XLU, I would just trade it like this. In fact, let's go look at the XLU where I can get some volume characteristics for you, because it looks like an A to B equals CD pattern could be underway here, with price just trying to clear its TAS market profile on a daily basis and dealing with a swing point out here. So we do know that the TAS market profile in this XLU, the top of the box for daily is 48.55. The swing point out here that you would benchmark would be November 29th, 14 million shares. You've done 11 million shares today. The little downdraft at 23 million shares. So that could be a little bit of a problem. Those we've got enough volume to exceed the swing point if price, in fact, could clear 48.50 today. We're looking at 48.55. That would set up your A to B equals CD to the upside. So at this stage of the game, we know that there is a bottoming pattern in place. There is an A to B equals CD pattern in place in the utilities, and it looks like they want to head up into the 49.22, 49.45, 50.08 level out there. So with regard to correlations inside of the XLU versus the TLT, I would not get caught up into it. I don't see it when we go back and study the charts. We can go back years before that as well and probably see the same type of thing out there. Instead, we want to be watching as to what goes on with the Japanese yen. Let's in fact go take a look at that. Let's put that up on the screen. Let's look at the December contract for yen futures out here. See where they are trading in hopes that I get some live, accurate data out here. Now we got something. Now we do. Take a look at where the Japanese yen is trading as we speak right now, yen futures. What occurred on Friday is a TD combo 13 count. Now, it doesn't always have to work, but they can identify areas where the market will reverse. Here, come back to the last 13 count that we saw out here. That was on November 10th. Now, the difference between November 10th and December the 12th, well, a lot of difference. First, when we saw this nice little TD combo set up on November 10th, price never closed above Stevie's oscillator unchanged line, which again tells us when the price oscillator is turned up. As we speak right now, the price oscillator is turned up. That is more of a bottoming signal out there. So the TLT could be looking pretty good. Now, so the message here on the trade, wait to see where the end of day finishes on yen futures. You most certainly want to see some follow through to the upside on it in order to give you a nice little signal. If I switch over to a different workspace, I'll do that here. Let me see if I have the short-term chart out here. I do. Let me take a look at this 30-minute chart, right? The 30-minute chart, what is this showing me? It's showing me a TD setup 9 count out there as it made the bottom. So that is a positive. Whoops, grab the wrong tool out there. You grab the wrong tool, you're going to get the wrong result. Let me see, where are we with regard to wave moves? Fourth wave move to the upside. In this case here, with regard to the yen futures, unless they're going to be on a one-way move to the upside out here, not likely. It's going to really be about the first retracement or the next retracement out here. And it's a just retracement set up in A to B equals CD to the upside. So not enough information, but I can say is that it is looking good with regard to treasuries finding a bottom ahead of Miss Janet Yellen. This is Steve Rhodes with TFNN. Dow's up 22 points and 22 cents. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's up 19. Tom writes in, says, I'm currently long Nugget And J Nug wondering if you think miners may go higher. There may be some obstacles Wednesday with the Fed meeting, yen, euro, dollar, and gold out there. So that's a smorgasbord of questions, I believe. But let's go to the real question here. Do we think that Nugget and J Nug are going to move higher out here? So we talked about the Japanese yen correlation out here. There's the current contracts just as an example. So, we can see the clear directional. We can see the clear directional behavior between these out here. As we mentioned, because this chart is squeezed, you don't clearly see that price is above that oscillator and change line. That's the top panel. But we looked at the larger, more blown up, and we know that it is as we speak right now. Center panel is gold. It's in the wave number 6. Maybe it gets to wave number 7. Won't get to wave number 7 because it's a daily chart. Earliest would be Wednesday, Tom. So, and price is trading below its oscillator on change line. And that's a little bit of a bummer out there. But I'd still get my signal from that Japanese. Remember, it's going to be that first pullback retracement inside the Japanese yen, and then what happens after that probably does give us a signal. There's the bond trade on the very bottom out here. So yeah, it has potential because of the Japanese yen. Same thing that that Warren and I took a look at out here. Now, if we just go take a look at just the ETF itself, you said Nugget. Let's go take a look at Nugget and we're going to skip our market profiles out here. I'll post them, but we're basically going to skip our market profiles because they're sort of meaningless. They'd be more important, more relevant if we looked at the GDX. So let me just turn these off out here. Plus, they're so far away from where price is at. Although I do see a brand new weekly profile. I'll give you that number out here, 814. Now, that's a beautiful thing. If you're looking at my panel out here, the upper right-hand portion, you're going to see where it says BOTW and CTRW. You're going to notice that they're both at 814. Now, if we didn't know that this is really correlating to the GDX out here, which we'll put up the GDX just see if the same thing has occurred. If we didn't know that, we would say, boy, 814, where you're trading $8 right now, is really important because that should be strong support. Now, when you're trading below strong support, that means you're trading below strong support, and that's real significant resistance. So you really want to see Nugget get above that area. However, as I said before, and I'm not going to change my mind, the market profiles are somewhat suspect on this specific instrument. Here's what we also know, and that is that Nugget is trading into its swing point out here. Let's make it yellow out here, trading towards that swing point or inside that swing point from November 14th. That had 78 million shares. On Friday, you were back with 54 million shares, so you're still moving into a light volume. Today, even lighter, 26 million shares. And all the other tests have basically been light volume inside of Nugget. So, this is telling us that it is rejecting price to the downside. So yeah, that says that your question was, wonder if you think that the miners may go higher. This says may go higher out here, but you really want to get that yen to move. And look, if this is a significant enough bottom out here, a day or two is not going to really change the longer term trade on this. So getting confirmation out here would really be a beautiful thing. Now, the same is going to hold true with regard to your other trade, JNUG, but you did write in GDX, so we're going to go type in GDX as well. That we can see the light volume retracement into that November 14th area, 135 million shares. Friday, 99 million shares. Accelerated a bit on the way down, but still light volume. What I wanted to do here for you was just turn on those profiles and see if there is a brand new weekly, and the answer is no. It's trading right down into the weekly bottom of 2071 out here. So GDX says, it's got pretty decent support. If it closes below 2013, then there's problems in River City out here. So Tom, I hope that assists you with regard to that. And yeah, there could be fireworks between now and when Janet Yellen comes off or gets onto the stump out there. But I mean, there could be fireworks any day out here for a sundry of reasons. So I hope that helps you. Let me take a quick peek here in the email, see if there's anything else that I've overlooked. Yeah, we've got one here from Bill. Steve, can you tell me where NVIDIA support will be on the pullback? Oh, and there was one I didn't get to on Friday, right? Which was for Brent looking at RIG. So let me do that because let me look at that first because I've got NVIDIA here right in front of me and I won't forget. So if we take a look at Rigatoni, RIG, Transocean Limited out here. Oh, what a now look! This gapped up this morning. It's traded lower ever since. It's not a bearish reversal signal, by the way. It's a red candle, but it is not a bear. It's basically been moving higher in essence because the volume is 22 million shares out there. It did about 22 million shares on Friday. So at this stage of the game, until it turns into a bearish reversal signal, it's been moving higher with not less relevant. It's been moving higher with volume out here. Now, the weekly chart or the daily chart here says you're also getting back into or above profiles and everything. I'm going to turn those off. We can see that it's also moving into an area where this had gapped to the downside. So we want to go ahead and check on that volume. Here's your supply line, right? It's right in between the price points of 1623 and 1660. And the volume on that move to the downside on November 5th was 23 million shares. And you're moving into it right now with 22 million shares. This says that what RIG wants to do is now go test the high, right? You're moving into a swing point, into a breakdown area with volume. So even though it is sold off during the day and people are taking profits, it's kind of natural, normal, and so forth. At this stage of the game, this says to us, technically speaking, that this wants to get up into the 1717 level out here. If we put this on a little bit longer-term chart out here, the weekly chart, let me get rid of some of these yellow lines out here. There we go. What is this communicating to you and I? Big sign of strength the week of February 29th out here. Nice sign of strength on September 26th, and a big sign of strength again on November 28th. This says that Rigatoni, RIG, Transocean Limited, is off of the bottom. That's got nice weekly signs of strength in it. So great trade there. Brent in Martinez, California. NVIDIA. Let's go take a look at NVDA. We're doing this for Mr. Bill out here. And Steve, can you tell me where NVIDIA support will be on the pullback? This is a weekly chart. You want to talk about a sign of strength? This one is a gargantuan sign of strength. You want to talk about wide price spread, accelerated volume. This fits the billing inside the art of timing the trade out there. It had 110 million shares back on the week that began November 7th. That is wide price spread. That is accelerated volume. So no wonder that Bill is asking, hey, where is support on the pullback? Well, we do know that there certainly is going to be support at that most recent breakout on November 11th. If you were in Vegas, you were rolling. In this case here, you're looking for an 11 to hit. So move your money. Where is it? It's over the line. I haven't played craps in so long. I can't remember. But you hit 11. That's 11, 7 and 11. You're in good shape, right? That's not craps. Craps would be what, 3? Right, 3, and what else would it be out there? Anyway, that's so much for my crap playing out here. Boy, I did feel like crap last week, but back up and running. So that is always a good thing out here. Support. Let me answer your question. You got a couple different levels. 81.76 is going to be one of those areas. You've got 78.50 is another, and then you've got 71.50 out here with regard to NVIDIA, pulling back into a swing point that had 11 million shares with 10 million shares. I think 81.76 looks pretty certain. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 17. S&P is off about 5 points. Dan writes in and says, can I locate from the most bearish charts that I can find inside of the markets out here? Now, that is a loaded question out there. There's all kinds of thousands and thousands of charts out here. But why don't we just do this? Why don't we just simply look at the message of some of the indices and the sectors inside of the S&P 500? Let's just take a look at it on a little bit larger scale out here, because I got a whole right-hand side of the chart out there. Opto Tech Corp down 85%. If we knew that on Friday, yeah, exactly. So there's all kinds of charts that are moving to the downside as well as to the upside. But let's look at the more general standpoint. Let's go look at the NASDAQ Composite. What do we know about it at this stage? You're pulling back. We took a look at the NQ. We know there's likely an A to B equals CD to the downside. That means a Gartley buy pattern that could be setting up there. And in this case here, with regard to the composite, as long as it trades above 53.79, it's nothing more than just a little bit of a retracement, just nothing abnormal out here with regard to the NASDAQ Composite. It's either in wave number 1 or wave number 5 out here. We don't know at this stage, but it does have a rising price oscillator. 53.79 would change that tune. But right now, the tune out here for the NASDAQ Composite is bullish. If we take a look at the semiconductor index, well, here there may be a slight problem. That slight problem is if you take a look at the low that was formed out here back on September the 13th, well, you are in wave number 7. Wave number 7 occurred on Friday. The move to the downside today confirms that wave out here, that wave count. Worse yet is that the semiconductor index, which just really had a horrible day. This is on December the 1st out here. Price is now back down below its oscillator on change line. So if you're leaning that major top or whatever it is you might be leaning, I'd say don't lean that way. You're going to fall down and hurt yourself potentially. But if you're leaning that way, this chart would say, geez, the semiconductor index is a good sandbox to play in. Maybe go take a look at some of the equities inside there and go ahead and play the weak ones. That's what the SOC says. If we look at the transports out here, transports have been on fire. Prices really today just pulled back to test the level of support. Steve's red line, that oscillator unchanged. It is slightly below it as we speak, but slightly below it is not that big of a deal out here. So at this stage of the game, just pulling back to test support, and that is the trannies as we speak right now. Again, we're taking a look at this at 1:44 in the afternoon. If we look at the XAU, now this helps those folks that are taking a look at the mining sector. This has been dancing and traveling above the oscillator unchanged line, just moving sideways, but nonetheless, that means that it is bullish to slightly bullish out here. Today, Friday, nothing more than a test of that level. 79.91 in essence is the number. So that is slightly positive, certainly not bearish out here. The Wilshire 5,000, right? Not really 5,000 stocks in here, but nor is there 2,000 stocks in the Russell 2000 out here. Wow, we've got spit flying all over the place. Now, that's a dangerous thing. In any event, out here, you probably didn't see that, and I probably didn't need to even annotate that to you. But in this case here, if we do take a look at the Wilshire 5,000, man, there is just well, I take that back. You thought I was going to say nothing bearish about it. Well, there is. On Friday happened to be a TD combo 13 count. Now, this really represents the health of U.S.-based companies out here. So concerns would be if you get below 23,382. Otherwise, nothing more than just a bit of a retracement that could be going on. Let's look at the New York Stock Exchange. So this has got international, U.S.-based, got the whole 9 yards out here. Also a TD combo count, but 2 days earlier, but price still trading well above 11,031. That's the number that's got to fail. If this thing is going to give us some type of negative to bearish type message out here, we're a long way, or it's a long way away from doing that. Let's go take a look at the NDX 100, considered to be the culprit of a lack of movement in the marketplace. And you and I could say, that's not really true. It just appears to be true. This is like a David Copperfield type trip out here. Here's what we know about the NDX 100. 4 trading sessions ago, wide-ranging bar, crushing right through Stevie's red line out here. And unless it gets below 48.34, which it hasn't done, just doing some backfill out here. So the NDX 100 actually doesn't look too shabby out here. Nothing bearish with regard to the NDX 100. Russell 2000 out here, taking a little bit of a breather today. Not until it gets below 1366 is there any potential problems in Tinseltown out here. This has been moving higher, doing less relative energy today as we speak right now. A bit of an evening star pattern, but it always depends upon where this candle closes at day's end. 1366 is the level where price is likely going to head to be tested as support. If it fails there, price comes all the way back into this early December time period, around December the 1st out there for a test of its swing point. That is on Russell, about Russell 1868 or something like that, because it ain't the Russell 2000. And we take a look at the Dow. Hopefully this is helping you out. And if it's not, just give me a call, send an email, do something along those lines. Wave number 6 to the upside inside the Dow. Strong like bull. Can't get to wave number 7 until Wednesday. All right, you have to have a lower low tomorrow out here, but there's not anything that it also had a little TD 13 count out here a couple trading sessions ago, but with price above that OUL out there, really no problems. Okay, so the only thing we found, and take a look at those indices, is that is the SOX, the Semiconductor Index, that is the weak link. So if things really start to go to heck in a handbasket, whatever that means out there, because who would really want to be in a handbasket? I don't know. It just doesn't sound like a comfortable ride. But if things were to go to all heck in a handbasket, you'd want to be looking inside the semiconductor index. That'd probably be the first piece to fall. Now, how about those financials? Let's hear it for the XLF. However, it did confirm a 7th wave move on Friday. It was really Thursday's high that was that 7th wave move. However, thus far, the retracement, as you can see, just testing Stevie's red line out there. Until it closes below that, you might say, what's that number, Steve-O? Good question. I can't see behind the line out here, so now I've got to do this. Where is it? Chart there. Show data box. There we go. Show data box. Put on your crosshair. Put on your best Sunday outfit. That number is 2350. You're 2354 right now. So watch that. If you get below that, well, then that could say, okay, we've got a retracement taking place inside of the XLF, which could make sense before we go into Wednesday's meeting out there. We looked at the XLU earlier. Let's look at the energy sector with, we didn't take a look at light sweet crude. We probably should. It's up $1.82. See what that means out here. But in the case of the XLE, that candle could move it higher. Red candle, nonetheless, still bullish out here. It's a combination of candles, right? It's not a bearish candle, and you've got a rising window, which is a bullish candle out here. It is in wave number 6. Again, like I don't know, maybe it was the S&P that we looked at, can't get to wave number 7 until Wednesday at the earliest. So what else might be out here to pay attention to? Really not a lot of bearish looking things. Hey, we haven't looked at the XLRE, the real estate sector. This looks not too shabby out here. Looks like it's going to move to higher price out here inside of the S&P 500. Not a huge weighting inside it. That's a XLRE. Steve Rhodes with TFNN. Dow's up 12. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow is up 11. The S&P is off 5 points. Let's use this next 4 minutes here to just go look at some individual stocks out here. Lockheed Martin, I believe LMT, the ticker symbol. I think they're the latest wrath of the tweets out there from President-elect Donald Trump out here. So talking about the cost of these planes that it's working on, jets that it's working on. Here's what traders are doing with regard to Lockheed Martin. Now, price is trading below both daily and weekly market profiles. Let's go ahead and turn that off. Looks like a hammer candle today, does it not? Only problem with today's hammer candle, it's also a gap to the downside. So you've got to be careful. Here's what we do know about traders, in that this swing point, or the sign of strength, nice sign of strength, wide price spread, accelerated volume. Back on November 9th, that was accelerated volume with 4.1 million shares. You pulled back into it so far today with 5.3. So, their traders are finding some value in this area. Let me see what else I might have on this chart here, on my other chart, LMT, see if anything else sticks out. LMT, yeah, price was moving higher, doing less relative energy out here. So it certainly did have that pattern in play, did it? Yeah, it had that pattern in play. So here's what we put up LMT. So this was before the tweet came out. We can see price moving higher. TD 9 count, this is back on December 5th, moves a little bit lower the very next day. Is trading below the oscillator unchanged line. So, price has pulled back. And you see this little green dash line out here? That was old resistance. It is now becoming new support out here. So that's why I found support inside of the middle of that gap to the downside. So that could be it with regard to Lockheed Martin. If we were just looking at this other chart, this black based background chart out here, we would not have known what was it that identified why did price stop where it did. And we put up the other chart and boom, voila. There you go. So we'll probably see a number of these for the next, 4 years or so out here. And what else do we want to look at to the downside? Yeah, that Opto Tech Corp, that was a phase 3 deal. Not a very good phase 3. Price line off 22 points. No big deal out here. Falling behind the move, 239,000 shares. Was moving higher with volume characteristic on a daily basis of about 350, 500. So not that big of a deal with regard to its pullback today. How about to the upside? Let's look at Chipotle, CMG up $12, 3% moving into its, didn't mean to do that. Moving into its gap out here to the downside that had some big volume, 4.9 million shares, only 1.4 to the upside. Steve, could you please remind me, where is your oscillator and change line on the ES? Well, what time period? Maria, would you be looking at out there? The daily, though, if I don't know, 30 minutes. Okay, 30 minutes. Well, I'll give you the daily, too, 22.26.50, basically, on the daily time frame. On the 30-minute time frame for the March contract for the ES Mini, you're looking at a price point of 22.51. 22.51 as the oscillator unchanged line. It's really going to all be about the NQ out there, and the question is, okay, should it complete this A to B equals CD to the downside? Then what? Because that's a Gartley buy pattern, by the way. Should it go ahead and complete that out there? So we'll just have to pay close attention. Is that the next buy point for the market moving higher? Yeah, these markets still want higher price, folks. They still want higher price, and for a lot longer than most people think. Some people think it's a sell the sell the inauguration. I tell you what, it's not. And when I do the Tom O'Brien show segment on the second segment, we'll go take a look at why. Have a great Monday. We'll see you on Terrific Tuesday or at about 3:15. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.